The Coinbase IPO is coming. Our view on Coinbase, our view on crypto, our strategy. This is the Not Even Wrong podcast. It's April 12th, 2021. This is Crimdelco for the day. The fund is up 1.7%. The market is flat. We are down 2.3% for the year. The market's up 9.2%. We're underperforming by 11.5%. The Coinbase IPO is pricing as we speak. It's a bit of a special listing, so it's not like one of those IPOs that probably will pop 50% on day one because there's already a future trading and it's a direct listing, etc. But anyway, long story short, by April 15th, we should have a traded liquid stock called Coinbase, and therefore we are about 3 days away from this event. Now, how are we thinking about this? What are our thoughts? What is our strategy? Let's set the stage first. So Coinbase is a crypto exchange, so it allows people to buy and sell cryptocurrency. More importantly, I think it's also an on-ramp. So it is for many people, including us, the first step into the crypto world. So you connect your, let's say, your bank account with Coinbase, and then you start buying and selling crypto. So this is in a nutshell what Coinbase core business is. Now, in the S1, they talk about many other opportunities, how they can make money. There is financing, banking, settlement, custodian type stuff, institutional services. So if you're a hacker that wants to buy $50,000 worth of Bitcoin in order to do business in the dark web, you can use Coinbase. If you are Fidelity that wants to put $500 million to work in Bitcoin, you can use Coinbase. So of course, these are different use cases, very different types of security, reporting, compliance issues. So Coinbase is trying to cover all of this. And I think this is part of the reason why the market cap is already expected to be over 100 billion. So to put that in context, this is about as much as Goldman Sachs. So how come that a company here based in San Francisco that deals with cryptocurrency is already priced as much as the gold standard of Wall Street, Goldman Sachs, that has a very fertile M&A advisory business, an incredible bond and commodity business, particularly the bond business, which of course, given the large bond market that we have, is humongous. And then we have also the equity side and derivatives and all that. So to cut a long story short here, I think what people are expecting is that Coinbase can grow into an integrator and roll up of cryptocurrency, crypto finance services. So let's say 5 years from now, they will be not just the Goldman Sachs of crypto, but they will be the JP Morgan of crypto, the Fidelity of crypto, the settlement system of crypto. They will be a roll up of all these things. And I've seen many types of reports and thoughts and stuff like that. I think fundamentally what people are thinking is that this is the Netscape moment of crypto. This is when crypto goes live. This is when crypto goes mainstream. This is when crypto, and Netscape was the on-ramp for everybody else on the internet. The internet, of course, existed before Netscape and before the browser was developed by Netscape. But it was very difficult to do business, to even get on the internet. Forget about doing business. What Netscape allowed was the on-ramp. And I think this word is very key here. On-ramp means you go from non-crypto into crypto and you enable all these kinds of services, all these kinds of potentials. You can look at the market size. For example, we looked at the Chicago Mercantile Exchange today. The Chicago Mercantile Exchange brings about $5-6 billion in revenue and has a market cap of 70 billion. So trades at about 15-16 times sales. The Coinbase has about 6 billion in sales, trades about 100 billion. So is similar size in sales, higher valuation. And what's absolutely key is that the margins of Coinbase are much, much higher than the margins of the CME. The CME has a humongous amount of transaction volume and collects very little, less than 0.1% sometimes of fees, of commissions. Versus with Coinbase, it's more than 1%. You can see that yourself. You go out there, you want to buy $30,000 worth of Bitcoin, you're going to spend $400 or $500 on fees to buy that. So this is the key difference, and we discussed this internally today. We thought about this. We thought that I guess the business case for Coinbase is that these commissions will come down because of competition, but the volumes will grow. So overall, you will have maybe a 10x in volume and maybe only a 2 or 3x in earnings, but that still is perfectly fine. Let's say 5 years from now, the stock will trade at maybe at 5 times sales, but the earnings multiple will still be pretty handsome, and you will have still a good return on the stock. The way we feel about the company, I think it's a first for many things. So it has a huge premium. It has very high margins, very high commissions, very high almost everything. And that is a good thing. That's a bad thing. It depends how you look at it. The good thing is it shows you how little competition there is in the space yet, but it also, of course, calls for more competition. There's Binance, for example. They're offering the same thing. We're a crypto exchange. We offer this, we offer that. There is all these other different wallets, MetaMask, where you can buy and sell crypto also. It's not very clear who is doing it. There's Aave, for example, which offers you leveraged finance. There's DYDX, which offers margin trading on crypto. There are lots of different ways to get exposed, and it's not very clear if Coinbase is going to be the only one. So for us, it feels like it's the kind of investment you just want to be in, like the same way when Facebook went public or when Netscape went public. You don't think much, you just buy it. To use the words of Peter Thiel, maybe this is a stupid investment, but you know what? It's so stupid that just nobody will, like, you're not going to see all this institutional money and everybody buying it until way later when it's kind of becomes obvious. I don't think it's that. I think people are realizing that Coinbase is a massive investment, and it doesn't feel stupid to me personally. It feels actually pretty smart to invest in a company like that. The only question is, what are they going to deliver against competition? How is competition going to act? Those are open questions. So this is a real business. Actually, the good news here is this is a real business problem. This is not, you don't have to fantasize anymore. Like, let's say, when we look at companies like Uber or Airbnb, there's still fantasy there. Oh, they're going to change the world. It's going to be different. But you don't even look at them as a business because they're not making any money. There's no a comparison. There's nothing here. There is making money and there is comparison. So I think that those are actually good attributes to have. And the valuation is the valuation. I mean, we always have to look at the valuation also in the context of almost zero interest rates and 4 or 5 trillion of stimulus printing and all that. So valuations are high all over the place, and we have to get used to them. Valuations are high in the real estate market, in this market, and that market, in every market. And therefore, I think it's not such a big shock that we have this pioneer in a potential $1 trillion market that has almost no competition right now, that has millions and millions of users, that is printing enormous margins, has enormous growth, that we have a very high valuation there. Nevertheless, I think the way we look at it at Orange Capital Partners is that we will stay away from Coinbase for now. Reason is simply that we really don't see how competition will play out. There's a lot of competition out there. There's a lot of there are a lot of apps. The DeFi world is growing like crazy. There is so much competition. It's difficult for us to gauge what is the mouth? Is it innovation? Are they building an innovation stack? So if we look at our principal stack, is this a unique business? Yes. Are they building an innovation stack? Yes. The innovator's dilemma here, yes. The incumbents are sleeping, but I think the one thing that we have to be very, very cognizant about is what about competition within the space? I don't think Goldman Sachs or JP Morgan will compete with Coinbase anytime soon, but what about Binance? What about what about this and that? I mean, there's all these apps. We've been working on this for a couple of weeks. We've been doing transactions, for example, on Aave, which is great, DYDX, another exchange. There's tons and tons of opportunities to do business. And the question here is how are the margins of Coinbase going to hold up? This is the question. Now, the other big question, of course, is okay, what are Bitcoin and Ethereum going to do? The two main assets in crypto are Bitcoin, BTC, and ETH. How are they going to evolve? If they do well, Bitcoin's going to do, excuse me, Coinbase's going to do well. If they don't do well, and you see, even in my brain, I equate Coinbase with Bitcoin, because if Bitcoin goes to 100,000, Coinbase is going to double. If Bitcoin goes to 40,000, Coinbase is going to be down 50%. So you're really getting indirect exposure to Bitcoin and ETH. And this is our strategy, is going to be to buy ETH and ALGO. This is what we want to do. We're going to put about $30,000 per investor. Okay, we don't need to talk about sizes here, but we're just going to put, let's say, maybe all together about $100,000 in ETH and $100,000 in ALGO, and we're going to collect some interest holding on to these assets. We're going to also start leveraging them in the DeFi world, and start working with that money and see where it takes us. I think this is a more valuable strategy for us also, to learn about the space, to learn about the intricacies of the space, to see who's building what innovation stack. I think because it is finance, because it is actually really down our alley, this is almost like in the old days when we were macro hedge funds and we're looking at Thai baht and things like that. This is really a kind of a new world of being a macro hedge fund. We do want to own ETH and ALGO as an asset. Like I said, we might collateralize it, use loans against it, try to do other things, but we want to own this. We think that particularly ALGO has a 10x in the near future. With ETH, it's a little bit more driven by the macro environment and how the crypto world evolves. But we have no doubt that the demand is very strong. So we believe that there's also a 10x in ETH, and therefore, $100,000. You can do the math. So this is our strategy. To summarize, we will not buy Coinbase. Coinbase is a phenomenal asset. However, we don't know how the competition will play out. And we also not quite sure what kind of innovation stack Coinbase is actually building. We don't know enough about the company. And we think that it is more interesting for us to buy the underlying assets like ETH and ALGO and stay with them and collect interest on it, and also let's say, try to use those investments to evolve in the DeFi space and see what kind of innovation stacks are being built around crypto. To us, this is a more interesting way to get involved in crypto. It's still very early days, and it doesn't mean that we might invest later on in Coinbase. Maybe we need to do some more work. Maybe we need to listen to a couple of conference calls, get familiarized with it. We also didn't invest in the first IPO shares of Tesla. We were actually relatively late there. But nevertheless, I think once you as an investor, you're confident that you know what the drivers are, what the innovation stack is, how your principal stack relates to the investment. Once you're very comfortable with those types of questions, then you can also put on a large position, and we're not there yet. Therefore, we prefer to go with relatively small amounts of money into the crypto space, buy the assets because we like the assets, ETH and ALGO, and then just stay with them and see how they evolve. Thank you.